Extreme economic changes will be the new reality. Ray Dalio is the founder, co-chief investment officer, and board member of Bridgewater, the world's largest and most successful hedge fund over the past 4 decades. Ray has spent more than 50 years as a global macro investor and has studied the previous 500 years of history and economic cycles. He explains the current cycle the world is experiencing and provides further details on markets and asset classes. In this video, we'll discuss Ray Dalio's assessment of the current economic climate, the drastic changes it has brought about, and how you as an investor may diversify your portfolio to deal with this new reality. Hi, allow me to welcome you to another video of Finance Sense. We cover all the latest trends in the financial markets and the economy. So make sure to leave a like, subscribe if you're new to our channel, and turn on the notification bell to keep posted. With that being said, let's start. Ray Dalio asserts that the cycle we are currently in is a result of 3 significant historical factors at play. These have occurred and reoccurred numerous times over the last 500 years. The first of the 3 factors is that when it comes to finances, governments always need more money than they have access to, even when they run out of it. Hence, they print large amounts of money, which in turn lowers the purchasing power of that money due to the increased supply. Take the United States, for example, which has accumulated the most debt and printed the most money globally, also known as quantitative easing or exporting inflation to the rest of the world, notably in the world's primary reserve currency, the dollar. The second factor, according to Dalio, is categorized as a social and political influence, the rivalry between those on the political left and right, which is often caused by the wide income differences and opportunity gaps that are present in the United States. As a result, what we are witnessing right now is very close to a civil war. This rivalry is composed of representatives on both sides of the aisle who would rather fight than compromise for their way of doing things. Dalio argues that our ideological, economic, and political differences are reflected daily in the news and may be seen as economic disparities. He further stated that we are in a situation where we could have an election in which neither side would accept defeat. Thirdly, with regard to the transformation of the existing world order, we are witnessing the relative decline of the United States while simultaneously witnessing the growth of China and other countries. India, for instance, has strengthened its position. World orders are established after wars, and the winners in such wars are the ones who decide how things should go. After World War II ended in 1945, the United States was the world's wealthiest nation. It controlled the majority of the world's gold reserves and half of the global economy and had a monopoly in military power. Because of the United States' historical position as a dominant global superpower, the United Nations is located in New York, while the International Monetary Fund and the World Bank are both headquartered in Washington, D.C. However, due to China's rise as a global superpower, this relative position has been deteriorating recently. According to Dalio, a significant power rivalry is currently taking place, and historically speaking, this issue has always been handled by armed war. And as of the moment, the world is experiencing 5 distinct types of war: trade wars, technological wars, geopolitical influence wars, capital wars, and military wars. Meanwhile, according to Dalio, the most crucial thing in this economic environment is to avoid owning debt assets that are vulnerable to inflationary pressures. Second, it is advisable to create a diverse and well-balanced portfolio of different types of assets. If you properly diversify and examine the correlations between asset classes, you will discover that when a particular asset rises, another one falls. For instance, during periods of higher inflation, commodity prices, gold, real estate, and other asset classes tend to outperform other types of investments. Additionally, there are areas of stock market where investments won't have a significant negative impact. Moreover, Dalio contends that there are many assets that gain from inflation. Thus, it is of utmost significance to establish a diversified portfolio since it is the way that you can keep a solid return without taking up so many risks. In other words, you can reduce up to 80% of your risk without sacrificing your return if you select investments with roughly the same expected return but are not correlated, then combine them effectively. Therefore, it is crucial to learn how to effectively diversify, which includes diversifying across countries. Dalio continued by saying that all currencies today are fiat currencies. Countries with fiat currencies typically print a considerable amount of money since no country wants to see its currency grow too much. Furthermore, Dalio argues that the tightening of monetary policy we are currently seeing is only transitory and is expected to last for 6 to 12 months. This tightening will result in market weakness followed by economic weakness, which will be followed by yet another wave of easing. Therefore, Dalio believes there will be a correlation in the massive US debt and money production due to the impending tightening. Moreover, as a repository of wealth, the Fed will not raise interest rates to compensate for inflation during this period of tightening. This means that you will still continue to lose money to inflation, so it is more advantageous to invest in those inflation hedging assets. In addition, according to Dalio, the world is about to enter a phase where it will be challenging to determine what currency is acceptable. There will be competition between fiat currencies, non-fiat currencies, and other currencies. But in Dalio's opinion, the dollar will continue to be significant. On the other hand, when asked about the current status of gold as a currency, Dalio stated that gold is a low-returning asset or a dead asset. It is a limited supply, non-productive asset as opposed to equities which are constantly being developed and produced. However, Dalio said that although it's sometimes crucial to hold gold, there are other times when it will just be a worthless investment. Even allied nations avoid lending money to one another during conflicts since everyone accumulates debt, and if they win the war, other countries will have to pay their debt back with a depreciated currency. Dalio believes that the environment we are in right now is favorable for gold. Therefore, gold should comprise a significant portion of your portfolio, but not the majority. This means, as Dalio suggested, that 15% of your portfolio may be gold, and that the other 85% of your portfolio should be comprised of other assets when considering portfolio diversification. Meanwhile, Dalio argued that cryptocurrencies are remarkable in the sense that they were programmed and have been functional for around 11 years. However, there are still issues associated with them. To begin, the overall value of Bitcoin, for example, is far lower than the value of Microsoft. So if you think about all the different places where people keep their money, the overall value of Bitcoin is not a very big number. Second, since crypto transactions can be tracked, privacy concerns are an issue. When they pose a threat to the alternative currency, they may be regulated, shut down, or deemed illegal, which is what usually happens. Therefore, Dalio does not believe that currencies will be kept as central bank reserves for a variety of reasons. There is a saying that gold is the only asset you can own that isn't somebody else's liability. In other words, you are the owner and are not dependent on a third party for payment. With the way things are right now, there is a chance that political seizure or other types of confiscation will happen. Thus, while weighing the pros and cons of various asset types, it's important to ask yourself whether the asset you have is something you can take with you, trade practically anywhere in the world, and is generally accepted. Additionally, Dalio asserts that one of the most important indicators is the cost of an intelligent person or a cost of an educated person. For example, India performs exceptionally well in this respect, and its levels of indebtedness, which is another crucial indicator, are relatively good in contrast to the levels of indebtedness in other nations. However, the aspect of bureaucracy, as well as the general quality of education and infrastructure and internal strife, are areas of greater concern. But as per Dalio, India is likely to have the greatest growth rate of any nation over the next 10 years. Hi, it looks like you've reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you around!